Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Curtis,
Yes.
And we're heading towards the end of August now as we build up for the new September play. But we have got one show in, I think, before the September play is upon us. But every time is flying.
Yes, yeah, and going back to your dealer days, you'll know just how busy it is in franchise dealerships at the moment. And I mean, how welcome would a bank holiday be? Probably not that welcome as they're prepping for September. What do you think?
Very much depends on the weather, I think.
Yeah.
If it's too nice, then forget it. If it's a bit dull and not a lot else to do, then you can have a decent show of customers, depending on whether you're open on the Sunday and the Monday, I suppose. But I think it's a hit and miss with the weather and it's the last bank holiday of the year as well. Don't forget. So there's a lot of people that have taken extended holidays, haven't they, this week? And to tag on to the bank holidays weekend to get that extra day in onto their holidays as well. So it's a hit and miss, to be fair with you.
Yeah, definitely. And talking of good weather, I hit some really good weather last weekend for the British Motor Show. I went on the Friday, so it ran from Friday to Sunday at Farnborough, sponsored by Kazoo. And it's a great event. It's been going for, I think this is probably about the 5th year, and I've been for the last 2 years. And you can see how the show is evolving. I mean, it was nice and busy on Friday, and the feedback I got from the Kazoo team was it was mega busy over the weekend. But I had a great day. There was a few dealers there. There were charters who were representing Peugeot and Citroen, Yeomans representing Nissan, and Marshall representing BMW Mini, amongst others, and plenty of brands as well. So that there were likes of Ford, Tesla, BYD, JQ and Omoda, and Alpine. So it was a busy day, and I think what's that they've really established it as a family day out. So there were plenty of live events going on, be it stunt shows, presentations, and just fun things for kids to do. So it had a really good buzz about it.
Like you say, it's a funny one, isn't it? Because it is really for consumers. It is that family consumer. It's not an industry. Go and see all the new cars, like a car show for the industry. It is a consumer event. And I know a couple of friends of the podcast were there, because I know Ian Godbold was there, who obviously does his top tips for us. And I know Karen Hailston, who is a fan of the podcast from MCC. She was down there as well. So
they were both there, and I missed
you
both
missed them.
of them. Yes, I did. But I did catch up with some old friends there, and which was lovely actually. Just bumping into people within the industry, and certainly the Kazoo team were there in force. So it was a great day out.
Fantastic. So, I mean, we've not got many shout outs because there's a few big headlines and a few things going on at the minute in the industry. But what we do want to give a shout out to is this month's special interviews, because we've had 3 of them this month, and they're still very topical, aren't they?
Yeah, we've over-delivered this month, haven't we?
We have, yeah. But they've been some good interviews as well.
Yeah, definitely. Starting with, we did catch up with John Hanlon, the CEO of Wayland's, at the beginning of the month. And that was right on the back of the group's latest acquisition. Perfect timing. So he was able to tell us about what the acquisition meant to the business, and also taking on 3 new brands. So that's available as a standalone pod. So I do urge you to check that one out if you haven't heard it already.
Yeah, and the other one is Nick Thomas, who's the UK MD for Changan, who are the new Chinese car maker launching not soon now, in September. So I'm sure you'll start to see a lot more from those guys in the media as they go live with their dealers, and we'll certainly probably be catching up of who is taking on that franchise as we head into September. So keep an eye out for that one.
Yeah, and apparently we've got an exclusive on that, haven't we?
Yeah,
Nick did tell that he did say that he'd tell us first, so we'll hold him to that.
definitely.
And the third interview that we did this month was with Jonathan Butler, who's the automotive legal expert at Geldards. And that was on the Supreme Court ruling on finance claims and specifically the ramifications for dealers. And, that is still a hot topic. So definitely worth checking out if you haven't listened to that already.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
And companies already featured on this supplier special include iVendi, ETT, Generational, Tracker, MTC, Jigcar, Chetvik, CarCare and AutoChat. This list is getting a lot longer, Curtis. So if you do want to profile your business, then do get in touch with Curtis or myself. I am excited as well at the minute. We have got another supplier special due up in the next week or so. So I do keep a check out for that one. And if you have missed any of these special supplier specials, then they are all on your podcast feed and still available. And as I say, if you do want to have a conversation about becoming a supplier special, then do please get in touch with Curtis or myself.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from Car Dealer, AM, Motor Trade News, The Times, and This Is Money. Starting with Vertu boss Robert Forrester leads an industry call for a rethink on the government's plans to reclassify the employment car ownership schemes, or ECOS, as company car schemes and liable to benefit in kind charges. Meanwhile, the industry gives a warmer welcome to the government's plans to extend the plug-in van grant until 2027. Trustpilot has suspended car supermarket Big Motoring World's reviews for an alleged breach of its rules. Then, after the midway break, we'll look at how monthly payments on Teslas have virtually halved as the car maker moves to boost its flagging UK sales. Arnold Clark has opened 50 EV charging hubs across its dealer sites in Scotland and England. And finally, we'll have an update on the ongoing Citroen recall story that we covered last week, because there's been more models added to the list, and the Transport Secretary has weighed in with some rather strong words for Stellantis' UK boss. But we'll start with that car dealer story under the headline of Fears Raised Over Government Clampdown on Car Dealer Employee Perks. Now, Phil, I know this is one that you've been closely involved with, so it would be great to get some background from you on this. But this is specifically about the employee car ownership scheme, which is due to change from 6th of October next year. Now, at the moment, there's, I think we can call it a loophole, which means that these schemes, they don't attract benefit in kind charges, and they are used by dealers and indeed OEMs to register cars and to give them to, make them available for staff to run on a monthly basis with a monthly allowance. And then certainly on the dealer side, they can be remarketed as nearly new cars. But as I say, the government has had a look at this, and it doesn't like grey areas. HMRC doesn't like grey areas either, and they're looking to close this particular loophole October next year. But Robert Forrester in the Sunday Times over the weekend really raised the sort of counter argument against why closing these schemes would actually damage the industry, would damage new car sales. So what did you make of this one?
Yeah, I think for context, as you say, I mean, you could see it, and we know that we talked about the double cab pickup that was closed down recently, and unfortunately, the sales of double cab pickups have, let's say, slowed down since that benefit loop was closed. But yeah, essentially, there is estimates that there is 76,000 employees across 1,900 companies who do benefit from the ECOS or CBS, the car benefit scheme, as it's otherwise known as. Now, that estimate, I'm getting more feedback that is low from an estimate, that actually the employees using it and the number of vehicles going through the scheme is significantly higher. In the quote from Robert Forrester, it says about 100,000 units a year towards the 2 million registrations that the UK do each year. Estimates are that it could be in as much as 200,000, if not more, because of the speed in which some of those vehicles are cycled through the scheme. So there is employees having a car every possible 2 months or even 3 months, in some instances where they get a new car replaced every 3 months. Now, yes, on one hand, if you look at the fiscal impact over time, the government is saying that in the first financial year, 25-26, it will save 275 million. In the next year, 220 million, and then down to 195 million as the scheme runs out. But obviously, Robert's come at a slightly different angle to say, one, if you look at it, whether it's 100,000 units a year or whether it's 200,000 or even more, what impact does that have on the overall recovery of the UK automotive sector in terms of registrations? Two, the income that's raised from taxing these vehicles. Yes, there is lost revenue in terms of tax paid from benefit in kind from those employees benefiting from the scheme, but the government don't seem to be sharing any information about the revenue that's earned from when the car is registered and VAT and tax is paid. When that vehicle becomes a used vehicle and sold as a used vehicle, the VAT and tax that is paid on that vehicle, etc., and all the peripheral revenues that are earned from these 100,000 or 200,000 units per year is not being discussed. And obviously, what is going to be the impact when an employee who's currently driving a £40,000 vehicle and getting the benefit? What does that employee do when this scheme ends? What does the employer do when that scheme ends with that employee? Because that's the bigger picture with some of this, is that the benefit that employee is having. So it is quite a big thing that's not far off now. It was kicked back from April to October, so it has had a deferment already. And obviously, I think at the minute they are trying to get another deferment on this becoming into effect on the 6th of October 2026.
Yeah, and it's I think it's very much a case of how much the government will listen to the industry on this, because Robert's argument makes perfect sense. Yeah, and he is saying that the cars registered under this scheme represent around 5% of the new car market. So, that's a significant figure we're talking about. And, if it was to end, then these cars will not necessarily be produced or sold into other channels. So they just won't exist anymore. And in response to Robert's piece, because it did pick up a lot of coverage. So, as I say, it was in the Sunday Times and it was picked up by the trade publications over the course of the week. And Cooper Parry, the accountancy firm, is now advising dealers not to include ECOS scheme perks in their new starter packages from now, saying that many car dealers use the schemes to put these high-spec cars on the road that might not otherwise get registered. and therefore be seen by customers. But Cooper Parry's head of automotive, Ian McMahon, says this will be an initial blow to the UK sector if this guidance bites, with a lot of dealers not being able to have the higher emission and spec vehicles on the road to allow the public the chance to see them in action. And our overreaching guidance for dealers and similar businesses is to assess the commercial impact as soon as possible.
Yeah, and I think that's the thing with it, isn't it? I mean, we were saying before about that peripheral revenue that comes from these vehicles once they have been registered, and the tax and earnings that come from it, etc. But it's what do you do, because you're attracting employees into the businesses, be it dealer, be it OEM and others, in terms of that whole automotive ecosystem. Is it potentially going to cost businesses? Because that employee that has been used to a vehicle of whatever level for whatever time period, is it going to then you need to do something salary wise or bonus wise to counter this? So there is potentially, on top of all the national insurance increases in the dealer world, there is a risk that this could hit profitability of the dealer network that just hasn't been considered in this. So yeah, it's a lot to roll on this one, but my conversations with the government, we're going to have to go back to them with some credible evidence of the impact of what this would mean to the sector if it is implemented in October of next year. But we're heading over to AM Online now, sticking with government. Now, we can actually back the government on this one, I think, can't we, Curtis? So,
yeah, this is a more positive story for the industry, isn't it?
It is, yeah. So the government extends the plug-in van grant until 2027. So the government has confirmed that funding for the plug-in van and truck grant will continue for another year until at least 2027, but retailers will have to wait to find out the new grant values. That's an interesting one. I can think of something else that they're still waiting on, but we'll get onto that later maybe.
Yeah, you're right. So as it currently stands, the scheme offers discounts of up to £2,500 for £2,500 for small vans, £5,000 for large vans, and then £16,000 for small trucks, going up to £25,000 for large trucks. And the Department of Transport said the extension would give van operators greater certainty to plan EV purchases. So this really is welcome news for the industry, and it does actually come at a time when, as we were reporting, it was either last week or the week before, on the new van market, which has seen, I think it was 8 or 9 consecutive months of decline, and the only sector within the new vans that was growing was EVs, because they were actually up last month, and they have been increasing, albeit from a very, very low base, so not enough to actually contribute in a massive way to the new van registrations that we've reported have been declining. So this is welcome news and gives a bit more certainty to the sector.
It does, as you say. I think with everything going on at the minute with the electric car grant, the ECG, and still waiting for what vehicles, if any, get the tier 1 at 3,750, which I'm led to believe there isn't any yet.
No. In fact, we should have a weekly update on that. Yeah, still no new vehicles that qualify for the top band.
Yes, but I think it's, as you say, I think it's welcome news, because the commercial sector is a little bit more challenging than the car sector at the minute in terms of this transition to electrification. So I think that is certainly welcome news on that one. But going back to car dealer now, Car Supermarket, big motoring world, has reviews suspended on Trustpilot for breach of rules. So
reviews are so important, and there's definitely two sides to this story, which are both covered within the car dealer story. So I do urge you to read it. But the piece in Car Dealer, which I do urge you to read, it does outline the argument for and against, and it clearly two sides to this. So it says that Big Motoring World has had its review suspended on the Trustpilot site for breaching guidelines. And it says that the page itself, the Trustpilot, says the breach has come as a result of the firm inviting people to review them in a way that encourages positive reviews. And a warning has been displayed on the car dealer's page within Trustpilot, and the company rating is unavailable due to the breach. And it goes on to say that strict new rules regarding reviews came into force earlier this year by Trustpilot, and car dealers can face fines of up to 10% of their global turnover, or £300,000 for falling foul of them. So this one has got to play out, but there is a defence from Lawrence Vaughan within this story. Now, Lawrence is the CEO of Big Motoring World, and he told Car Dealer that under the firm's current management, it has invested more than £5 million into developing its customer support capabilities. And he goes on to say that Big Motoring World complies fully with the terms and conditions of Trustpilot and all its partners, and there are system controls in place to ensure ongoing compliance at all levels in the business. And he goes on to say, we are currently seeking confirmation as to the reasons for the Trustpilot suspension. And he adds that one potential cause is a misunderstanding about incentives for submitting a review. And he goes on to say that, in common with many retail businesses, there is actually an incentive to participate in our own customer survey. And I think that's the key to this story. But we do not and would not offer an incentive to customers to submit a Trustpilot review. So I think this is the nub of this particular story, and it's down to where the incentives have been placed. So I think this one's got to play out a little bit more.
Yeah, definitely. And obviously the car deal at the Big Motoring World are obviously coming out from the classification of incentive in terms of that, what they're classing as an incentive for the review. So as you say, that we'll watch this one play out, won't we?
We'll be back after the break with the rest of the week's big stories.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are on your podcast feed.
So next story is from The Times under the headline, Tesla almost halves monthly payments as UK sales slump. So this was reported in The Times at the beginning of the week, and the story is really focused around how UK buyers can now lease a Tesla EV for just over half of what it cost a year ago, as the company attempts to boost its flagging sales in the UK. And the piece goes on to say that with Tesla's market share falling across Europe amidst stiff competition from its Chinese rivals, the company has been forced to offer discounts of up to 40% to car leasing companies to shift more units, and those discounts are being passed on to customers. So it's a good time to be leasing a new Tesla, but probably not a good time for Tesla to be trying to sell cars into the market.
I mean, that's the thing at the minute. I mean, we know that the leasing sector have been significantly hit by the depreciation of Teslas and other EV products across the sector, but we know that in the early stages of the realignment, should we say, for the benefit of the listeners, of EV values, this is not going to help, because there is a quote in here saying that a Tesla Model 3 can be leased for as little as £252 a month plus VAT on a 36-month contract through Silverstone Leasing, and that the Tesla's latest model, which is the Model Y, retailing just around that £60,000 mark. It was advertised on a low £376 monthly plus VAT cost through Synergy Car Leasing website. So again, you should think about the cost of that. I mean, it's for nothing for that kind of a vehicle, and the risk is with this, it's going to drive down values of used vehicles again. But obviously, from a Tesla perspective, and I'll let you do the quote on this one in terms of, what they're facing at the minute, they need to get some volume through, don't they?
Yeah, and this story is really does highlight the logistical challenge that faces Tesla, because it's it does point out that there is a lack of storage space for Tesla vehicles in the UK. So the vehicles are coming in, they're sitting around. The last thing Tesla wants to do at the moment is make further cuts to the retail prices of its cars. So it's come up with this scheme to reduce the leasing costs, just to get these vehicles through the system. And it's a point that's picked up by Fraser Brown, managing director of Motorvise, quoted in the story. Motorvise are an automotive consultancy, and he said discounts to leasing companies, along with financial incentives from Tesla dealerships, were a way of shifting more units without dropping that headline price. And he actually says the most expensive way to find a home for these cars is by cutting the retail price. The cheapest way is to cut the monthly payments. So you can now buy a Tesla through a contract hire company or through a retail environment inside a Tesla store. You can now buy one for about half what the monthly payment was previously. So it really does show the challenges facing Tesla at the moment, because as we reported recently, UK sales have dropped by 60% in July to just, well, it was under 1,000 units, 987 units, and that was from around 2,500 units a year ago. So again, just highlighting the challenges facing the brand.
Yeah, and just on the back of Fraser's comment there, I mean, the challenge with this is, yes, great at the front end, discounting that leasing payment, making that, cost of entry, that cost per month cheap. But then where does that sit the 1-year-old, 2-year-old, 3-year-old Tesla on an alternative financing option that makes that look very expensive compared to what you can get on a new lease is the problem that sector has faced for some time. So yeah, again, let's see what that does to the numbers and the rollout with that one. But sticking with EVs and heading over to Motor Trade News, and this is fantastic in terms of this initiative, that Arnold Clark opens 50 EV charging hubs at their dealers. So chargers can be booked through the Arnold Clark charge app, allowing drivers to guarantee charger availability. So this is in Scotland and across England as well, and that they've teamed up in terms of the payments. You can go through your All-Star Business solutions, you can go through Octopus Electroverse, Plug Surfing, and Zap Pay. And this is right across their dealer network at a significant cost to the business, and slightly cheaper than public charging costs as well per kilowatt.
Yeah, I can imagine this being incredibly successful. As you said, a big investment from Arnold Clark, around £30 million they've invested in this charging network. And what we'll see is up to 8 rapid chargers being installed in each branch, with charging speeds of up to 150 kilowatts. And you mentioned costs, that they are very, very competitive, because the charging costs for the rapid chargers will be 55 pence per kilowatt. And you compare that with the national average, which is around 81 pence per kilowatt. So there's an immediate saving there for anyone who needs to charge away from home. And charges will be split between app users and pay and go customers, while most sites will offer 24/7 access. So it'd be interesting to see how they actually do that, because if they're on dealership sites, that there needs to be that accessibility out of working hours. And it'd be interesting to see how that actually works. Customers using these facilities during opening hours also get a free coffee. And I mean, it's a way to attract potential customers into the dealerships, because they're waiting for their car to charge. They can wander around, they can look at new cars, they can look at used cars. So Arnold Clark, as a group, have really thought this one through.
Yeah, I mean, I said at the start, it's a fantastic initiative, and Arnold Clark's were kind of the first and maybe the only that launched those EV hubs, if you remember, where you could go and test drive a choice of electric vehicles and go and talk to EV experts without a sell and non-selling environment, just to really educate and learn about those electric vehicles. So they have really been at the forefront within this retail sector about educating consumers. And now, as you say there, they're really getting those electric drivers into the businesses, those, but they're actually giving us support. And, first thing I was thinking is, what's my nearest Arnold Clark operation? You're getting a slightly subsidised public charging. Obviously, it's still more expensive than your domestic charging, but it's cheaper than a lot of the public charging cost per kilowatt. And you can book it and it'll be guaranteed, and it's 24/7. So you've got no limitation of time. You don't have to wait until they are open. So again, a fantastic initiative with this, and it'd be interesting to see how well they do from this in the future.
And finally, this week, just rewinding to last week, Philip, you may recall we were talking about the recall that was issued by Citroen back in June, and also last week there was a further recall from Stellantis across multiple brands. Two different recalls. The first one, the Citroen one, was for 40 airbags on specific models. They were the C3s and DS3s, whereas last week we were reporting on potential fire hazards which had been identified in France. So there's a lot going in the Stellantis network at the moment, but it's been compounded this week. And we did actually predict last week that we would be following up this story in the near future. Wasn't expecting to be doing it so soon, but what's happened this week is that another 10,000 owners have been notified about 40 airbags on different models. So these are C4s, DS4s, and DS5 cars built between 2010 and 2013. And there are stop notices, and this is why this particular recall is so significant. So since June, it's been applied to 96,000 owners, and now we've got another 10,000 owners with stop notices. But this story goes on to say how Transport Secretary Heidi Alexander has got involved in the debate.
Yeah, she's managed to get a letter back into the automotive sector. They're normally the ones receiving the letters from the automotive sector, referring into the earlier opening news from Robert Forrester, who wrote to the government regarding the ECOS and CBS scheme there. So, yeah, I think, again, this is terrible, isn't it? It's not great for the drivers. Let's not kid ourselves. It is a stop driving. It's clogging up, obviously, the Stellantis network here in the UK with, the Citroen and now Peugeot dealerships as well. It must be quite challenging to manage. But again, the fact that government have now stepped in and supporting the consumers from a compensation claim perspective as well, saying that the consumers should be compensated. You just wouldn't wish this on anybody, would you? There's nothing worse than the size and scale of these recalls.
No, definitely not. And it is a hard-hitting letter from Heidi Alexander, because she says, I've received numerous reports from members of Parliament and their constituents detailing distressing experiences, lack of clear guidance and inadequate support for alternative transport arrangements. And she added that the recall had exposed significant gaps in customer support and transparency. And while Stellantis has conveyed its intentions to minimise the burden on consumers, this, according to Heidi Alexander, has not been the experience for many of those affected. And certainly, This Is Money, which is part of the Daily Mail, has been following this story very closely, and it does report a lot of feedback from the affected customers. And unfortunately, this has now been compounded because there's more models that need to be sorted out.
Yeah, it's not good at a time where the Stellantis dealerships need as many customers in their showroom for the new plate, etc. Looking at new cars, not trying to resolve recalls on older cars. But again, we'll see what does work out on this one. But those are your headlines for this week. So some big ones there in terms of what's happening around that ECOS or CBS scheme, 6th of October next year, 2026. Obviously, there is work going on behind the scenes to try and get that extended out. But great news from the government that they've extended the van and truck grants for EVs as well. But yeah, it's a busy week in the headlines, although still a lot of people on holiday, Curtis.
Yeah, although you wouldn't think it, would you? Because we're recording this slightly earlier this week, but there's no shortage of stories. So August has been just as busy as any other month this year, and there's no sign of any let up, is there?
Yeah, not at all. So if you are listening to this on Saturday morning, then have a great bank holiday weekend as well, and let's hope you get that last minute rush of sales in the pre-plate new plate in September on the last bank holiday of the year.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.